with China Market Research Group joins us on the phone line from Shanghai. Hi Ben, afternoon. Thanks for taking the time out and joining us. What is the key reason for the pressure that we're seeing in China today?
Yeah, I think there are two things going on. I think the first is following up from last week's rough week. We're still seeing investors sort of reeling from the government cracking down on shadow banks lending to retail investors for margin lending. Basically, shadow bankers are giving money to retail investors, allowing them to sort of pump up their stock portfolios. That's not going to be happening now going forward, and so that's caused a lot of people to pull money out of the market. The second thing, I think, is that there was no monetary easing over the long weekend. Typically, that's when the government sort of decides to reduce interest rates, inject a little bit of liquidity into the system. They didn't do that, and so I think investors now are sort of taking stock a little bit.
Okay. Then, if in case, this fund pullout is taking place in China, where exactly is the reallocation taking place of those funds?
I think if you look at some of the institutional investors, some of that money could potentially be moving to India or elsewhere in Asia. I think, unfortunately, though, if you look at what's happening in the stock market right now, most of the losses or most of the money pulling out of the market is Chinese retail investors who don't necessarily have access to other international markets. So at least in the time being, most of that money is going to be staying in China. They're sort of sitting on the sidelines right now as investors look at what's going to happen over the next week or two.
Any chance of government intervention and perhaps providing any relief mechanisms?
It's hard to say. I think probably we will see more monetary easing over the rest of the year, but maybe not in large amounts. That should help the stock market. I don't think that the rally's necessarily gone away, but property markets are starting to pick up in China right now, and so that's going to also temper, I think, excitement for the stock market as consumers go back to buying property.
Okay. Is this more of hot money which is exiting the markets, according to you, Ben, or is it long-term institutional investors who had holdings in Shanghai?
I think it's probably more hot money overall that's kind of coming out of the market right now. If you look at institutional investors, I think they've kind of hit the pause button a little bit. They're waiting to see what happens with Chinese stocks getting added to the MSCI index. When that happens, I'd expect to see probably more money coming into the market from them. So on balance, things are probably going to be positive over the rest of the year.
Okay, Ben, we'll leave it at that. Thanks so much for joining in and explaining that. By the way, keep your eye out in Europe. It's opened up with cuts of nearly 0.5% for the